So we have a price rally in gold, we have a little bit of a gut punch for premiums, and the question that keeps coming up is what should we be buying? Now I think we have some good options, we have some bad options, and then we have a little bit of disagreement on which is which. We're going to look at what to buy, at least over the short term, and we've kind of been jumping back and forth between spot price and premium. This is a little bit about both, but mostly about premium. Now, I think what to buy right now, at least, it's a pretty clear decision at the moment, but I'm going to warn you, it might not be what I do personally. I'm not always smart, but let's come back to that. So we need some backstory for any of this to make sense. Last week's rally, that led to gold's best week, at least in terms of price growth, in more than 2 years. It jumped about 8% from the recent low, and that is significant. A lot of people, they're running with that statistic. Now, Kitco, just as an example, they recently ran an article and they quoted somebody named Adam Button from ForexLive.com. And he said that he was bullish, or they were bullish probably, on short-term gold prices. And Kitco has him quoted as saying that if inflation has truly peaked, then so has the US dollar, and that will continue to support gold prices. In other words, they're going to go up. Now, the rally actually started on higher unemployment numbers. We don't need to go too deep into this, but that's how it started. And then it continued on lower than expected inflation numbers. They came in at 7.7%. Investors expected 7.9%. So the bet that led to the rally was that we were seeing the beginning of the pivot, but it assumes first off that we truly have hit peak inflation, meaning it's going to continue to go down, and then second, that the Fed agrees and they feel that everything is under control. That would lead to slower rate hikes and less aggressive monetary policy, which would then lead to a weaker US dollar. After all that, a spike in price for gold and silver. So it's a multi-part bet, and personally I'm skeptical about the Fed feeling inflation is under control yet, but that is the formula for the Fed pivot that we've been talking about. And don't get me wrong here, even though I doubt that the Fed is ready to pivot yet, I think it's only a matter of time. It's coming. And I think that pretty much covers the backstory. My guess is that the rally could very well lose its steam in the short term, because right now it's just speculation that they might pivot. I also, though, think that it's going to do a lot more than we just saw once the Fed actually does pivot. And the reason that the backstory is important for this video is that this idea that we hit peak inflation and investors have turned bullish on gold, that drives retail demand. Retail demand drives premiums. And if we're buying physical gold and silver, well, that part's pretty important. I know that the premium increase, it seems wide scale, but it's actually been limited to pretty specific products depending on where you live. Now, here in the United States, there are a lot of products that you can find for decent premiums if you shop. Now, the Buffaloes, the American Gold Buffaloes, make a pretty good example. The last one that I bought was in June, but I do watch the premiums on them and Eagles since they're still my top choices if I can find them for a decent premium. But right now, the cheapest that I can find either one of them is about 12% for a 1 ounce gold coin. That's pretty high. And take a look at some other examples, though. I see 1 ounce Maples, Britannias, Kangaroos, and Philharmonics for less than 6%. Again, we're talking about 1 ounce coins. I've been buying other things. I just picked up a Lunar for about the same price, 6%. But if I was buying normally, I would choose between the Britannia and the Canadian Maple Leaf. To me, really, they're a toss-up. Either one is a great deal. Now, that differential of US mint coins having twice the premium as other government-backed coins, it's pretty similar across the board for fractional coins as well. If anything, it gets a little bit worse. And you can find quarter-ounce Philharmonics, Kangaroos, Britannias, Maples for about 14%, give or take. Now, it's a little bit high, but it's not terrible. You'd be lucky, though, to find a quarter-ounce American Gold Eagle for double that. 28% higher for a typical quarter-ounce gold bullion coin. That's pretty crazy. So I would say that we have three options here. I just mentioned that I would probably be buying Canadian Maple Leafs or Britannias right now, but I'm buying these series coins for the same price. So that's option one. Just buy something a little bit cheaper. Arguably, it's the smartest option. Now, option 2 would be to just take that a little bit further, consider the absolute lowest premium options that you can find. Maybe look at bars or Krugerrands. There are always options to get closer to spot. And then option 3, it's to more or less just ignore premiums and just keep buying what you want. I think that I could make a pretty good case for any of those 3 options, but 9 times out of 10, you'll probably hear me recommend option number 1. If you watch what I'm actually buying, though, you'd probably see me following option 3. Now, I recognize that the smart option is number 1, but I don't always follow it. Again, just not always smart. I'm going to buy what I already have the most of, what I already consider the best choice in a typical price environment, partially because that's simply what I want, but probably more than that. I do think that we're going to eventually see that actual pivot, and I do think that that's going to spike gold prices a lot more than the 6% wasted premium. Now, that isn't advice that I give to others, but for those of you who think that way, well, I get it. Another idea for me, and I'm not really sure that this deserves to be called option 4, is buying higher price collectible pieces that might have crazy premiums, but they're no crazier than any other time. Now, I might not want to buy a Buffalo right now because it's $100 higher than normal, but I had no issue buying that Proof Dragon at 28% premium since that's what it always is. And basically, it's no crazier than it is any other time. And the Perth Mint, well, they don't really care when I would like them to release their products. Now, I feel like this needs a recap. I mentioned at the beginning the speculative rally, and I think that it retraces until the Fed really does back off on rate hikes. Maybe that's December 15th. Maybe it's off a little bit, but I really do think that it's only a matter of time. That's my 2 cents right there. Premiums for the most popular products, they're crazy right now because of demand. Then the smart way to go there is to buy the slightly less popular products, at least until premiums come back down. I'm not really following the smart way to go right now, even though I think that that's pretty clear. Now, I'm just willing to pay a little bit more premium for what I want, or just hold out, wait for it to come back down. And in the case of an extra 6% premium on those 1-ounce Eagles and Buffaloes, I am pretty confident that we'll see spot price go up more than 6% when we finally do see a pivot, so it's hard for me to worry about it too much. And if that feels like a little bit of a shoulder shrug on a topic that I made up, well, it's not really my topic. This is a question that's coming up constantly right now. And I just find it to be very difficult to reply in a comment with 2 different answers and explain really where I'm going with this. So I figured a video is the best way to do it because I end up here in a case of do what I say, not what I do. That comes up anytime I try to answer this question because the logical advice is not always what I do. It's a little bit like Ben Franklin's quote, "The bitterness of poor quality remains long after the sweetness of the low price is forgotten." I'm not sure he's actually the one who said that, and really, I'm the last person who would call a Canadian Maple Leaf or Britannia to be of poor quality, but you get the idea. The last bit of justification that I would say here for that option number 3 is that there is always some aspect of this, to me, that's a hobby. And I'm willing to sink a little bit of cash into a hobby that I enjoy. And that means that I'm willing to pay a little bit more for a Buffalo if that's really what I want, or maybe I'll wait a little bit on that Buffalo and then buy something like that Proof Dragon in the meantime. It might not make the most sense on paper, but I've spent money on worse things. So I think that covers the topic of what to buy right now. So let's call it good there. Let us know what you think about premiums. Are you switching what you buy? Are you holding out? Or are you just aping in and buying whatever it is that you like? No judgment here. And while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.